Hello. So I've got some good news and some bad news. The good news: Investing Daily's options trading service, Jim Fink's Options for Income, is now one of the most popular investment publications in the world. Our subscribers are making an average of $205 a day, which adds up to $75,000 a year. Our subscribers are spending just 9 minutes a week making their trade. Many of these subscribers are complete beginners. Jim Fink has outlined everything for them, so all they have to do is follow the instructions and make their trade. Other subscribers are accomplished traders in their own right. They've learned how through Jim Fink's tutorials. And now for the bad news. You only have a short window of time to subscribe. Why? Because we've become too popular. We only open our doors when we have a certain number of slots available. Our publisher has limited these subscriptions to 1,000 so that each member can get personal attention. We're opening our doors for just a short term now. I encourage you to take advantage of this opening while you can.
Hi, my name is Jim Pierce, and I'm Director of Investing Daily's Wealth Society. Today I'm sitting down with Jim Fink, Chief Investment Strategist for Options for Income. Good morning, Jim.
Good morning, Jim. Thanks for having me.
Great. Well, we're here today to talk about Options for Income, of course, so why don't we start with just how it got started? How did you get Options for Income started with Investing Daily?
Well, I've been working for Investing Daily for over 4 years now. I've had many years in the financial industry before coming to Investing Daily. I was a investment manager. I was a financial planner. I worked for a university endowment.
So you're obviously very sophisticated when it comes to investing, but for our readers, why should they consider investing in options?
I have found options to be the most profitable type of investment I have ever come across. I mean, I've been investing for over 25 years and I've been trading options for a little less than that. But when I learned about options, my returns just exploded. Options are a way to generate equity-like returns, 20% a year, and you do it without having the stock needing to go up. What I do is I sell a lot of put credit spreads at strike prices below the current stock price, and you make your maximum profit even if the stock doesn't go up. There's no other investment asset out there like it.
Right. Well, like you, I was a stockbroker for 25 years, and whenever I mentioned the word options, people would immediately pull back and just basically say that they felt options were too risky for them. Are options as risky as most people think?
Well, with every investment, there are two sides to a trade. So there's a risky side and a not risky side. So when you hear people talking about options, they're talking about buying out of the money calls, hoping for the lottery ticket to pay off. It's a very low probability bet. That's how most people use options. But there's the other side of that trade. I mean, people lose buying options. People make money selling options. And what this service does, Options for Income, is selling options.
Right. So you mentioned the trade. There's also this perception that options are more difficult to trade than stocks. How difficult are options to trade?
Well, maybe back in 1983 when options were first listed on the Chicago Board Options Exchange, they might have been a little arcane and difficult to understand. But nowadays, everybody's trading options. Volume has skyrocketed on all of the options exchanges. It's a very common way of investing, and you just need to learn how to do it.
Right. So can you kind of walk us through a typical transaction for your readers and an idea of, generally speaking, what kind of profit potential there is on an average trade, say?
Sure. I mean, when I set up a put credit spread, I always am aiming for a minimum profit of 20%. These trades usually have typical durations of between 1 month and 4 months. So when we're talking about a 20% return, we're not even talking about an annualized return. We're talking about a return for just a few months' time. And the way I do it is I have 3 criteria I look at. I look at fundamental valuation, because my background is as a value investor. So I always want my options, which are derivatives of stocks, to reflect fundamental value. I mean, that's how I choose the strike prices. That's how I choose the options to trade. Once I've got the fundamental valuation, then I also want to look at more short-term catalysts, such as seasonality.
Right.
The Options for Income website has a very unique application called the 10-year Seasonality Navigator, which is an amazing software benefit that I have not seen on any other website anywhere else. You can only get it on Options for Income. And what makes it so special is that you can put in any stock ticker and it will spit out within seconds how that stock is performed before the start date that you choose and one of the next 6 expiration months. So once you have that stock put into the application, you can see whether the stock has historically over the past 10 years risen in a certain time period 80% of the time, 90% of the time, even 100% of the time.
Right, and the seasonality index or indicator, isn't that something that came about between you and some of your subscribers?
Well, I had originally started using seasonality based on the Bloomberg terminal we have at the office, which is, a $1,500 a month subscription. Average people can't do it. We have it at our office.
Right.
But even the Bloomberg application was primitive next to what we have now on the Options for Income website. Fortunately, one of our Options for Income subscribers, he was so enamored with the philosophy of seasonality that he's retired now, but he took time out of his busy schedule in Las Vegas to develop this proprietary software application, and he has developed this that application which is even better than the Bloomberg terminal.
Right.
So that's one of the great things about the Options for Income community is that you don't just learn from me, you learn from each other. We have incredibly intelligent members of this service who help each other out.
Right, and I see we have something called Stock Talk that where subscribers can talk with one another. And quite frankly, a day doesn't go by that I don't see several people chiming in on current transactions that all of you are working on or just helping each other out. So it's a really cool service.
It's definitely more than just a one-way broadcast. It's really an interactive service where we view each other as fellow traders, and we're all trying to help each other out, and it's a real community.
Right. Now you mentioned that this one person that helped you with the seasonality index living in Las Vegas, and I think there are some people who feel like with options it's almost a form of gambling, yet your track record is something like 82% of your trades have resulted in profits, right?
That's correct.
So it's clearly not gambling. I mean, anytime you're right 4 out of 5 times, you can make a lot of money in the market. I have here a list of just a sample of some of your transactions that to me are extremely impressive. In fact, in your conservative portfolio, it looks like there were 79 profitable trades in a row.
That's correct. In the conservative income portfolio, which is the meat and potatoes of our service, that's the majority of trades are in that service. I've had 79 consecutive closed winners.
Wow. Well, it's clearly not gambling, and there's some science there that's working. So can you explain what investment at risk means and how you determine what the net profit for a net contract or one contract is?
Sure. Almost all of my trades are put credit spreads because it's like investing in stock, but at much lower capital at risk and a much higher possible rate of return for similar risk. So what I do is, let's say I have Praxair, for example. That was a great one. With Praxair, I sold a 5-point spread where you sell one put, you buy a lower strike put, so your risk is limited to the difference between the strike prices. In this case, since it's 5 points, that would be $500 per contract. But when you sell that, you get money up front as a credit. In the case of Praxair, which is an industrial gas company, we received a $170 credit up front. So you to determine the investment risk, you take the margin requirement, which is the $500, subtract out the credit you received up front, which is $170,
right, okay.
And that brings you to your investment risk of $330.
Okay.
Now, in the case of Praxair, we had to roll that one time because at the initial expiration, it was slightly below the short put strike. So we rolled it for an additional credit, another month or two. We got another huge credit for rolling it. And so in the end, we actually benefited from that roll, and we were able to more than double our rate of return through that one extra roll.
Right. So you're using some terminology that some of the people watching may not understand. I do know that with your service, you send out very explicit instructions for your subscribers so that even if they have no prior experience with options, and I think you literally say, when you call your broker, say this, and you actually have almost like a script.
That's right.
Where they don't need to know exactly what all this terminology means like you do. They just need to make sure that they give the correct instructions to their broker.
That's right. You have to provide them with instructions as to your position size and whether you want to use their services for opening trades or just to adjust existing trades. But there are brokers out there who will help you make these trades. At least when you're first starting out, sometimes it really helps to get a little helping hand. And then when you learn to do it yourself, you can just do it yourself.
Right. So if I'm understanding you correctly, you tell your subscribers exactly how to execute the transaction. If they don't want to do that, they can go to a broker who will execute it for them. You've got 79 profitable trades in a row in your conservative account. 82% of these transactions are profitable for all of your portfolios.
Probably a little higher than that now, but we'll go with that.
Okay. You know, it's natural that some people may be listening to all this going, well, this just sounds too good to be true. How is it that you are able to consistently deliver these profitable results when so many other people who go into the options market win some, they lose some? What is it that you're doing that's unique or different that nobody else is?
Well, again, I think what I'm doing is what most option market makers, the professionals, do. I mean, there's a big divide between how most retail investors trade options and what the professionals do in the pits. And what I do is I try to mimic what the professionals do. I lived in Chicago for 10 years. I dealt with a lot of the market makers at the Chicago Board Options Exchange. I know how they think, and that's how I trade now myself. And the thing you have to do to win 80–90% of the time is you just have to be conservative in your trades, in that you are not shooting out the lights, not going for the lottery ticket, not buying out of the money calls or buying out of the money puts, hoping for the big score. You want moderate returns, 20–30%. You're selling options, you're not buying them, so you're having time value decay working in your favor. As I like to say to people, there are only three things in life that are certain: death, taxes, and time value decay. And what time value decay is, options have something called time value, which is a speculative element beyond what the value would be if you exercised it right away. That speculative element decays over time. That's a certainty. It happens every time. You want that on your side. It's like an eternal tailwind at your back of investing success.
Right.
And I use that certainty of life in all of my trades. And so what I do is I sell puts at strikes below the current stock price.
Right.
So that will expire worthless if the stock stays where it is right now or rises. I don't have to be a clairvoyant as to exactly what the stock's direction is going to be. I just have to be sure that it's not going to fall below my put strike, which is very humble. I think humbleness in trading is very important. And I don't try to predict with any specificity what a stock's going to do. I just want to make sure it's not going to fall below its current price. So it's even less risky than buying stock, because when you buy stock, you only make money if it goes up.
Right.
The direction has to go in the right way for you to make money. When you're selling these out of the money puts, the stock doesn't have to go anywhere and you still make the maximum profit. That's the secret.
Right. The other question some of these people listening might have is, you are very successful. Clearly this is working extremely well. Why should you spend a lot of your time and effort on this service when you could just be sitting at home in front of a TV making money for yourself? But that's a question we get a lot in our business. If you're so good at what you do, why aren't you on your yacht down in the Caribbean instead of coming into work every day and working hard to make money for your subscribers? I know that as a broker, I always enjoyed that client relationship. I mean, to me, it wasn't just about the money. It was about working with all these people that I felt were friends in addition to clients. But what is it that motivates you besides just the money in doing this?
Well, I mean, that's exactly right. What you said. I mean, yes, I turned 50,000 into 5 million over a couple years, But let me tell you, trading at home is one of the loneliest, boring things you can do. It is not something you want to spend your entire life doing. Both of my parents were teachers. They loved educating young people. I grew up in an education type environment. I need that interaction with other people. I love to teach, I love to educate, and this is the best job in the world for me, because it lets me do what I love to do, which is trade options, and yet also interact with some incredibly intelligent, wonderful Options for Income members and talk to people on a social basis every day.
Right. And it's funny, you speak about growing up in an environment with education as a priority. You may be, in fact, one of the most educated people I've ever met in my life. If I have this right, you have an undergraduate degree from Yale, a master's degree from Harvard's Kennedy School of Government,
Correct. Yep.
An MBA from the University of Virginia's Darden School of Business, and just for good measure, a law degree from Columbia
That's right.
University. Now, that obviously, among other things, means you're a very bright guy, but do you find yourself in some way drawing on all that cumulative education in terms of informing your approach to options? Is there something along the way that you figured out from all of that that's the reason why you're able to do so well when others, struggle?
I think that's a good point. I mean, when you're in these educational programs, you're not thinking about all of the different ways that this knowledge can help you, but all of that education has definitely informed my investing approach.
Now, you've been mentioning some figures, turning 50,000 into 5 million and so on, but how much money does somebody need to take advantage of your service and be worthwhile? Do they need $100,000, $200,000? What?
No, not at all. I mean, one of the great things about options trading is that the capital required to put on a trade is much lower than it is to buy, for example, 100 shares of stock.
Right.
I mean, if you were to buy 100 shares of a $60 stock, that would be $6,000.
Right.
You could have the same 100 share exposure to that stock using a simple put spread, a one contract put spread, for no more than $500. So I do recommend that you have enough money to have a reasonably diversified options portfolio of at least 10 open positions simultaneously. So to have at least $5,000 to $10,000 to get started is recommended. But as far as how much you actually need to get one trade going, $400.
Really? Okay. Now, can you trade options in IRAs, or can you only trade them in regular brokerage accounts?
You can trade options in IRAs. The only things you can't do in IRAs are short stock or sell naked calls, because those have unlimited risk and margin. But
And how often do you do those?
never.
Oh, okay. All right. Well, there you go.
So, I mean, almost all the brokers that we deal with Options for Income allow you to sell put spreads where the risk is finite and fixed.
Right.
And it's not really considered margin because of that limited. It's the same risk as buying a call or buying stock. You know that your risk can never be more than what you invested initially, and that's the same thing with option spreads. So they allow that.
Okay. So, if I understand you correctly, somebody can effectively trade your strategies with as little as $5,000 or $10,000.
Correct.
They can either execute the orders themselves or set up an account through one of these brokerage firms that'll do it for them.
Mm-hmm.
And right now you're making money more than 80% of the time. So I guess the last question, which is really just kind of a rhetorical question, is why wouldn't somebody do this? Why would they instead go into a diversified portfolio of mutual funds that kind of goes up and down with the market and maybe averages 6 to 7 or 8% a year when they can do the kind of trading you're describing?
Jim, that's the eternal question that I've never been able to answer. I don't understand why anyone would not want to try this service, try this type of trading. The risk is low, the rate of return is higher. As long as you know what you're doing, it's just an enhanced form of stock investing where you get a higher return for less risk.
We at Investing Daily know how much value you provide to our subscribers, and we appreciate it. And I hope those of you watching at least take an opportunity to try Jim's service. Options for Income is rapidly becoming one of our most popular services, and based on Jim's track record, already one of our most successful. So thank you for taking the time to listen to us today, and we look forward to having you as a member of Jim's exclusive club at Options for Income. Thank you.
Thank you.
Now is your chance to try out options trading for yourself. Remember, our Options for Income subscribers are spending just 9 minutes a week making trades that earn $75,000 a year. So how does Options for Income work? 4 times a month, Jim sends you an email with step-by-step instructions on how to make the trade. Beginning traders can literally read these instructions word for word to their broker. Beginners who use online platforms like E-Trade, Scottrade, or others can easily follow these instructions on those websites and make their own trades directly. Jim also includes his research and rationale for each and every trade, so more advanced traders can use his instructions as a starting point to put together their own trades. Many of our advanced subscribers have used Jim's research to earn hundreds of thousands of dollars. Others have even become millionaires. So please join Options for Income today. We have a 90-day money-back guarantee so that you can be sure that it's right for you.
Remember, because of its popularity, Options for Income will only be open for a short period of time. Subscribe below before it's too late. We offer a 90-day money-back guarantee. If you're not completely satisfied, you get a full refund, so there's no risk in trying it out for yourself. Subscribe below. You'll be glad that you did.